Hey everybody, welcome back to another beautiful day in real estate. Today we're going to dive into a few things related to builders nationally and locally, and we're going to go into the market and the trends for the market in Bismarck, North Dakota. This is kind of important because right now there's a lot of things out there that are scaring people. So before we jump into anything, we're going to talk about interest rates. So after Jerome Powell's meeting yesterday, they decided to keep interest rates where they are. So interest rates naturally tick up slightly. I also think there's a lot more demand, especially here locally. For buyers. It doesn't seem like it, but the market's heating up. I know everybody's worried, everybody's panicking. What's going to happen? What's going to go on, right? This is important for us to be paying attention to. Jerome Powell mentioned two things yesterday that really stuck out to me. Number one, he talked about the job numbers. So the job numbers came in negative of what was it, like minus 17,000 in January and minus 92,000 jobs in February. Now, typically this is pretty concerning. Well, he this time did not even, they asked, well, how concerned are you about these numbers, blah, blah, blah. And he came back with, I'm not really nervous about it, he said, I'm not really nervous because he said, this is the shift in policy. So the shift in policy has to do with the immigration, less people for jobs. Jobs are being removed from the government standpoint. It's not something, I shouldn't say the jobs from the government being removed is not a big thing. It is a big thing. But he mentioned the immigration policy, which is something that stuck out a little bit. And number two, he did mention that tariff inflation was a one-time inflationary period, one-time inflation, whatever you want to call it, right? That stuck out because it was very small, it was very subtle, but it's like the conversation has been for many months about how tariffs are going to cause this huge inflation and it's going to continue to go up and blah, blah, blah. So I thought that was kind of interesting. Maybe I'm crazy, but anyways. Here's what I want to be showing you guys. This is something that kind of stuck out. Okay, so Nick Gearley, he's a phenomenal dude on X that I pay attention to. He's got great information. And anyhow, so he posted Lennar, America's second largest builder, has cut prices 24% from the peak. Homes that were selling for $491,000 in 2022 are now selling for $374,000. 8% down year over year and 24% down from the peak. Why? Because housing is so unaffordable right now. This is a big thing that we need to be paying attention to, right? Okay? This is very important because people, I know things seem scary right now. I understand that things seem very scary right now, but this is the time to be trying to get into a home, okay? I am working my ass off to get into commercial properties this year and to get into more rentals and to get into building. Because right now is the most uncertain I have been in many, many moons, which means I shouldn't say I know what I'm going after and I know what I'm going to be doing this year. But a lot of people are very scared because interest rates aren't where they want to be. And it's something that a lot of people are paying attention to, right? So as I mentioned in my previous video, there's a realtor talking about in Houston, builders are offering incentives. And I did in a short video, talking about you need to be focusing on getting into building if you want to get into a new home now rather than in 6 months from now when interest rates are down. Because when interest rates go down, the first thing that's going to get pulled from the table is the promotions and the incentives the builders are offering. Why would they offer incentives if the market's shifting in a positive note? They're not. I already know that my stuff is going to go away here in the next few months. People have been waiting since September of last year, waiting for the better interest rates, and now this house costs $40,000 more. It just happened to me. Sat down with somebody in September, priced out a home. It was too expensive at the time to them. And then we tried to dude, prices are going up. Well, I'm going to wait for interest rates. Interest rates came down 1%. But the house is worth $40,000 more now. That's how much our building costs have went up this year. Waiting is costing you money. It's very important for you guys to be paying attention to that. This is the time when the market looks like shit, jump in and learn how to swim. Okay? The next thing, one more interesting about housing market right now is that the divergence between builders and existing homeowners. Builders now have a 9 months of supply, heavy correction near crash level. But existing homeowners are only 4 months, somewhat normal. First time in 40 years this kind of divergence has taken place. My bet is the builders are signaling that signaling what will happen in resale market as cheap mortgages get phased out. Existing homeowners, meanwhile, are holding on for dear life, hoping the market bounces back for listing their house. Okay, so I can attest, okay, I have listings that have sat all winter long because, again, it's wintertime in North Dakota. Not many people are buying houses, but we still had homes moving, okay? It's important for whether you're a real estate agent or you're a buyer or a seller. Like, homes are selling every single day, no matter what the economy is doing. So you just need to work with somebody. Realtors, you need to understand how to explain this to people. When you sit down with them, they're going to say, well, the market's bad right now. We're just going to hold off. Okay, blah, blah, blah. I understand that. It happens. Okay. But what you need to be paying attention to, you guys, is this is your responsibility as a realtor to help them and guide them and say, homes are still selling. Homes are still selling every single day. If we price this correctly, you need to understand their why they're selling. I sat down with somebody the other day, and his why was he wanted a deal. I'm sorry, I'm not cutting my commission or listing a house too high because you just want to make money. I'm respectfully, I get it. We're all here to make money, but no, I'm gonna work my tail off to help people, not try and screw people. But anyways, this is why we need to be so cognizant of what's going on. And again, this is a national average. This is not what's going on in North Dakota right now in North Dakota, and we'll get to that in just a second. But the housing market right now, builders are offering incentives like freaking crazy because they have to get those homes off the books, because right now builders are bleeding. Okay. I can attest to it. I'm a builder. We're not bleeding, but we're not nearly as busy as we want to be. We're still selling homes. We're still getting people into homes. Right now, I'm in a battle with my, I shouldn't say a battle, but we're in negotiations with our subcontractors. They wanted to raise the price significantly this year, and our owner said, absolutely not. We're not doing that to the people, because right now affordability is at its peak. Unaffordability is at its peak. And for us to raise prices is just screwing them over. Not only that, but it's screwing us over as a builder. But right now, people need affordable housing, and we're not going to just cap into somebody who wants to make an extra dollar that thinks they deserve it. Again, totally blanket conversation. I understand people have to make money on their subcontractors as well, but the way that they're going about it is just obnoxious. Anyhow, rant's over for that. But you guys, right now is an important time, okay? So the other thing that we're going to touch on, because it's important, is right now, right now, home buyers are at the record low versus home sellers. 600,000 home gap between sellers and buyers. Why? Sellers have all this equity they feel from 2020 to 2021 to 2022. They're listing them, thinking their house is worth this much, right? Again, agents, price your homes correctly. They will sell if they're priced correctly. It may not be the best home it may not be the best price your sellers want, but you need to be upfront and honest with them, because it's costing you money to keep them on there, first off, okay? And you guys see this crazy time in 2021, 2020 right here, when this freaking buyer exceeded sellers by a significant amount. 23, 24, it kind of, coexisted, and now we're seeing no more buyers. Why? Because it's unaffordable to live in these homes at this point in a lot of cases, right? All that being said, is the market looks terrible. So buyers, if you can afford to buy, you need to be working on getting into a home now, because things are going to shift in this market. There was a statistic, 17% down in year over year value for new homes. 17% in new construction homes. They're down. That's huge. Take that opportunity, because when things change, which they will, and we've talked about it before, we're moving into a new world, a new era of real estate. When it shifts, you're going to be sitting on the sideline, wishing, hoping you are going to be able to get back into the market. You wish you would have bought in 2025. You're going to wish you bought in 2026, because now's the time to get into it, right? Okay, last thing we're going to touch on before we look at market trends for locally here is Reventure app. Excuse me, I can't talk. Reventure app. This is a unique thing that I never thought about for years. This thing has been up forever, dude. I used it a couple years ago for Airbnbs and stuff. Totally forgot this existed. All right. Anyways, so what this does is it gives a blanket observation, and I haven't upgraded. I'm going to be upgrading to premium here later on today, because this stuff, there's so much data you can pull from this, and oof, it's going to be juice for me. Anyways, so the popular data, home value year-over-year growth. This is Bismarck and Mandan, North Dakota, okay? This is my neighborhood. This is the place that I live, okay? Right now, we're seeing in Mandan, on average, a 6.6% increase from last year. 6% increase. So last year, you were talking about how high interest rates were, okay? You bought I'm going to use easy math, right? You bought a $100,000 house. That's not really a thing, but let's just use it for easy math. That means you are now $6,000 higher than you were last year. $6,000. You might have had to pay $100 more a month last year, $200 more a month last year. You couldn't have cut that out for 1 year, cut out your Starbucks coffees, cut out, not buying a brand new car off the lot again. Not, I'm saying this as if I don't drive a new vehicle myself, but 6% increase. You might have paid a little bit more last year, but now you could have refinanced. You could have refinanced from 7% interest rates to 6% interest rates where they were touched in the fives. So you lost money again this year, waiting on the sideline, paying rent, going absolutely nowhere, okay? Bismarck was a little bit different. We're a 4.7, 6.4 in the middle of Bismarck, and then the South Bismarck, it was about a 5%. 6% in the middle of Bismarck is because this is where a lot of older homes are that are going to be priced in that 250 to 300 range, which is the most popular. I talked to a seller yesterday. She redid a shitload of stuff on her house, and she's like, "Well, it's priced at 250. You think it'll sell?" I'm like, "It'll sell before it hits the market," because that's the market that's just ripping right now, because that's what people want to get into homes. Like people still want to get into homes, right? So when you are a real estate agent, you need to understand the data of your neighborhood. But this one is extremely big for me. 6%, you guys, this is huge. Okay, like, think of it this way. Like, you have a $300,000 house. The average right now, let's say $400,000. What's 3% of 400,000? Let's say that's $12,000, right? So you could have made $24,000 in equity last year, and you chose to wait because you wanted to see better interest rates. So now you're not only paying, you're paying a better interest rate. Congratulations, $100 less a month, but you lost $24,000 in equity. You could have paid $200,000 a month last year and then refinanced this year, took the equity, and got a better payment. But you didn't. That's why this is so freaking valuable, you guys. You need to understand what real estate can do for your future. Now, I'm not saying this is every year. Data in North Dakota, 3 to 5% increase on the year. Perfect, right? That beats inflation right now. If you're making 3% equity on your home, you're beating inflation by 0.3%. If you make 5%, you're beating inflation by 2%. That's the key. That is the key to gaining wealth. If you're beating the inflation, you're winning. Because every year, let's say again, the dollar's worth $1 and it goes down 3%, your dollar is now worth 97 cents. But if you have $1 and it gains 3% in equity, minus that, you're still at just over $1. At 2.7% inflation, you're at just over $1. You're at least conserving the wealth that you have or the money you have. You might be losing it slightly. I get it. But here's the thing. This is important. And a lot of people need to see this. Okay. Now, this is my local trends from January of last year to February of this year. It lags data slightly. The data will come out at the end of the month. Okay. Number of listings, active listings fell off. Right now, I'll show you months of inventory. It's insane. Okay. New listings, those are still falling. Okay. That's kind of crazy too. Sold listings, those are on the way up again, and pending listings, that are on the way up as well. Price trends, okay? I don't look at all of these right now. I'm looking at sold, median, sale. That's up currently, right? Again, up from year over year. Sale to list, okay, back in December, we hit our bottom where about this sale to list price ratio just means that if a house is sold at, again, we're using math, $95,000, or excuse me, $100,000, and it's a 96.5% sale to list price ratio, that means that the home sold for about 96.5%, which means your house sold for $96,500. Something that we explain to our sellers when we sit down with them, maybe my partner, because when we list at $400,000 and there's a list price ratio of 97%, we're like, hey, just so you know, you're going to probably see 3% less than what we're talking about here. So you're probably going to be at about 378 right now. It's good to build that expectation. Very, very, very good. Okay. To original list price ratio, that's on its way up too. We'll just kind of pop that in here, but it correlates, right? But now we're back up to 98%. So that means if you list a house at $400,000, 2% off of that is what, $9,000. So you're at $381,000 on average. It can change based off of what's going on and what part of the world, right? Whatever, it can change because your house might be a lot nicer than the next one. Your house might have a lot more upgrades, et cetera, et cetera. But we're also seeing days on market rip. They are back and they are going higher. Why? Again, it's also because North Dakota on standard, like you're going to see this last year too. It peaked in about March of last year. April, and then comes back down into the summer months, because the summer months from like June through beginning of August is usually a slight trickle up, and then it falls down in October. So like North Dakota, the best time to be in the market is April, May, June-ish, and then coming back in August through November. That's usually when you're going to find your best time on market, right? If you're selling it at the right price. But right now things are skyrocketing because, again, people are overpricing their homes and they still haven't found out the value yet. And number two, it's because we went coming out of the winter months. So it was 70 degrees yesterday for the first time in weeks. Holy crap, that was nice. Anyhow, months of inventory. Look at that. Dude, in North Dakota, we have less than 1 month's inventory. Oh, I'm sorry, just over. Dude, our absorption rate is 2.5. So that means if we stopped listing houses today, in 2.5 months, all of my inventory would be gone if they sold. That is far from a real estate crash in North Dakota. That is extremely far from a crash in real estate in North Dakota. Builders, they are going to be the year for me in my market. I don't know the rest of the market yet. I'm getting better at it. I'm understanding it. But North Dakota is going to be an absolute tear zone. And we're ready for it. We've been preparing for it. We've been creating the marketing. We have over 30 inventory homes going in this year. We have pre-solds getting ready to hit the market, or getting ready to dig ground this spring. You guys, stop waiting on the sideline. It's costing you money. Get into the market. Find a way. Talk to family. When I sat down with a young couple in their early 20s, 21, 22, they're going to buy a house at 21 and 22. My wife and I did that at 22 and 23 years old. We have 30% equity in our home. We are going to walk into our next home with 20% down. We're going to release the PMI, which costs about $100 a month, by the way. Property mortgage insurance. Okay. Stop renting. Renting is costing you so much money. You can, in North Dakota, it's $5,000 if you're going to rent a twin home from my company, which I have a line out the door, mind you, at $2,500, $2,200, $2,800 a month. You're putting almost around $5,000 down your first day you walk in that door, and you get none of it back because people don't take care of their homes. So when they leave, they lose that $2,500 deposit because they didn't take care of it. Dogs ripped up the carpet, cats, someone, whatever it is, Kool-Aid spilled, nobody vacuumed, somebody cleaned, whatever. It is what it is, right? It's renting. I get it. It's not your home. But it is costing you so much money to rent. And right now, everything seems scary. It seems uncertain. Social media has made it an absolutely terrifying mentality experience. I get it. But this is why you need to be in the market, because this data here alone, days on market, okay, I get it. 60 days on market feels like a lot. But you're getting 98% of what that home lists for. So if you've been in the home for the last 20 years like my client has, she's getting a 400% return for living in it. 400%. Like, pay attention to what's going on. This market's going to shift. I'm telling you. Thanks for watching. I hope you guys got some information from this. Make sure to like and follow the channel. We appreciate the support. We'll keep bringing you information as we can. Have a blessed day.